welcome to another edition of the Nerdy Agent Podcast. I am going to host again today. Luke is once again running around. He's got meetings and showings, so it's Josh on the mic hosting with AJ, and we have a special guest with us today. We brought Ben in. Ben D.
Hey, what's up?
Ben is a new agent that recently joined our team. We wanted to kind of do like a fun agent spotlight this morning because we thought if you're missing a brother, we got to add someone more fun, right?
You know what's also fun that I always love this thing that we do on our team is we really make an effort. Once we have a name on our team, we make an effort to get that name again.
We have Ben and Ben. We had another Ben for a while too.
We did have another Ben.
We have
for a while.
How many Lukes do we have now?
We have 3 Lukes.
Everyone laughs because I always say brother Luke.
We have 2 Jessicas. We're really going for it.
Which Ben is better?
Oh,
well, other Ben is also almost a family member. So
at being super tall, other Ben is definitely.
That's true.
Ben is good at
tall.
acting.
So tall. Yeah, I don't know. Or writing too, but
He's
anyways, Ben.
impressive guy.
Ben is he's been with us has been a month now.
Yep, about a month. Yep.
And Ben is writing his first offer already.
Yeah, yesterday actually. Yeah.
Tell me a little bit more about how your experience has been so far.
It's rocked. It's been great. It's been so fast and such a flurry, but like so much more social and communal than I thought. I thought I'd be really siloed for most of this process, and there's been such a like team atmosphere and so much support, and like Josh, you're my mentor through all this.
Yeah.
But so many days when you're not here, there's other people who jump in to help out. So it's been really communal.
Yeah, that's awesome.
Phenomenal. That's a good word for it. I like that.
Well, a fun story. So Ben and I met, how was it, 2 years ago?
Yeah.
It's got to be a couple years, right? And Kristen and I, as many people that know me know, we like to go climbing. I'm actually dressed in my climbing apparel right now because we're going to go after this. And we were at the climbing gym just hanging out. My sister was there, and we'd always hang out. And Ben was always on the same schedule as us. And so when you're at a climbing gym, it's kind of, once again, that word communal.
I was following you guys.
Yeah, people just they just kind of hang out. And you start looking at a route, and you're like, how do you want to do this? Or someone does something cool, and you tell them it was cool. And so we just found ourselves drawn to each other. And then every Monday and Thursday, then Ben was climbing with us. So we became climbing friends. And then he found out what I did for a living and asked more about real estate. And the more we talked about it, we're like, this could be a really cool fit for you. So, I mean, I guess tell me about your thought process in being like, I want to transition into real estate from something outside of the realm. Because you didn't grow up in this.
No. Yeah, my background's in youth development and then litigation consulting. So it's a lot of working with people and helping people accomplish goals and work through complicated processes. And so a lot of those skills transferred to this pretty naturally. And the one-on-one help with different people looking to buy homes has been really rewarding.
Yeah. And I remember when you first mentioned it to me, like, I might be interested in that. I looked at Kristen on the drive home and I was like, he will be so good at this. Because to your point, right, the ability to communicate with people, the ability to connect with them on a meaningful level and care about them were all skills that I knew you already had. So all we had to do from that point forward is figure out how to ensure that you know the role, the job, what it entails, and then ensure you get the opportunities.
Yeah, really. Mm-hmm.
And so you've had a month with us. You're already writing an offer. How many clients would you say you have right now?
I think I have about 4 clients, maybe 5 clients. So I got a new lead yesterday, so we'll see.
There you go. Well, I know
I was expecting him to have 10 by now for sure. Weren't you?
I mean,
I've been
one month in the business.
I'm so disappointed.
I've been slacking a lot,
man, what a deal.
laying down on the job over here.
But anyway, so we talk a lot. I mean, Luke does the little pitches about the team quite a bit on this, and just talking about, we feel like we've got agents that are selling this much in that month. But anyways, I wanted to invite you on today and just, get a sense of how it's going so far, but also hopefully highlight some of the things that we've told people before about the team, which is we have a lot of opportunities for people that want to get in the business, from a mentorship, from an opportunities with lead standpoint, et cetera, to come on board and to have success early and often. Ben's likely going to get this deal done. I believe in him. We have confidence. And then he'll just keep rolling from there. So I'm, we go post-mortem with Ben on every month or something and just tell us.
Yeah.
It goes from 1 deal to like 4 deals to like 8 deals.
Great.
Heck yeah.
I feel like the
number.
honorary brother at this point, because
There
last
you
weekend
go.
Luke wasn't here, so I was doing his showing. So this is like just continuing to be Luke. So
There you go.
Inducted.
Well, thanks for coming on. Anything else you wanted to ask him, or?
No, that's great.
Appreciate it.
Yeah.
Should we talk about tariffs with Ben?
We can, yeah. We'll get into the good stuff. I mean, I think we'll have to release this podcast pretty quickly because if we wait a week, what we say may have changed drastically.
Yeah.
Because stuff is changing every minute right now. I mean, we talked about tariffs back when the election had happened because that was a key policy component of the new administration in terms of what they had said they're going to do. They came on board and they actually did the thing they said they were going to do, and it did initially throw a huge wrench in the market. So do you want to let's start like last week?
Well, I can start with a little story though, because I think this is on the brother topic is a really good one. When we were younger, sometimes Josh would get mad at me and he would hit me, and when he would hit me, you know what he would say afterwards? Do not retaliate, and you will be rewarded.
Doesn't that sound like me?
Yep, that sounds
sounds
Josh.
just like
I'm
me.
just kidding. But
still
it's
says that.
kind of funny because that's what the president said yesterday. What happened is...
So I gave AJ a cookie when he didn't.
Wasn't that good? That was good.
Yeah,
We
We can confirm with Mom that is what happened.
She should be your next guest.
We'll have her.
Be cool, be strong. He also said that to me a lot
Yep.
after her punishing me. There was a lot of wild tweets happening, obviously, but also
They weren't tweets, Age.
Oh, they're the X's?
Socials, Truth Socials.
Oh, they were Truth Socials. Sorry, messages being sent over the interwebs. And what happened is there was just tariffs to high heavens on basically everything. They said this is part of the plan all along. Some people said it wasn't. But it certainly seems like our government, and notably our president, is trying to make China look like the bad guy in all of this.
Yep.
That's sort of how the walking back seemed to happen. So the tariffs came into play on April 2nd. Markets really didn't like that. That would have been last Thursday, I believe. That sent the stock market into a spiral, and the bond market sharply down. I think we were off 10% in 2 days, which was like the biggest drop since 2020. Then Monday, it sort of flattened out a titch. And then it was a little choppy on Tuesday. Yesterday, Trump walked back all the tariffs back down to a 10% flat number for 90 days for everybody except China, which he raised to 125%. And I told Josh what's crazy is if you look at the amount of imports we have from China, that would actually amount to about $600 billion in a year if the trade continued in tariff money. And I think that's, I don't know, they're probably looking at some complex math. At least I really, really hope they're using a spreadsheet somewhere or some sort of actuary to determine how this is going to play out. And not just straight line saying if we tariff them, they're going to continue to trade us this much money and we're going to make this much money. Because that's probably not going to happen.
I'm guessing imports will shrink just a little bit.
Just a little bit. And so the stock market is now off, I think, maybe 6-7% from last Wednesday. So took a little bit of a round trip. We were down 15, went up. The S&P 500 went up almost 10% yesterday. NASDAQ was up over 12%.
We're doing a little Michael Scott snip, snap, snip, snap, snip, snap.
Snip, snap, that's what that is.
Back and forth, back and forth.
Yeah, it's pretty wild. And the 10-year yield is still trying to figure out what to do. And so for the listeners, those that have paid attention and listened for a while, a lot of times what happens in a really volatile stock market, which the VIX is what you can follow to determine kind of the volatility and the fear in the stock market. When that gets over 40, you're seeing lots of really heavy swings, high volume trading. It got up to, I think, almost 60 or maybe a titch over. I think it is now back down to around 40 right now. But when you get a lot of volatility in the market and a lot of volume, a lot of folks, when it's trading down, are just moving their stocks into bonds. And a reminder for everybody, if someone sells to cash out of the stock market as it's moving its way downward, all of those sellers, a majority of them still wanted to keep their money into something that was going to yield them a return. And so then they go out and they buy the 10-year Treasury yield. Well, when demand increases in the Treasury yield, the yield of that bond goes down. So if demand goes up, so sellers in the stock market, buyers in the bond market, those bonds start to decrease in value. That leads to a lower mortgage interest rate. And we saw rates actually go down to around 6.5% on Friday, I believe. And then as the stock market started climbing back up, people are now selling that bond, which is leading that to go higher. So as there's less demand for it, and they're buying back into the stock market, and that's what's trading the stock market back up. So that's what's kind of been happening. And
so to really simplify that point, we've talked about on prior podcasts, the 10-year Treasury yields tend to impact 30-year mortgage rates. That's the most closely correlated component. So if Treasury yields are going down, mortgage rates are likely going down. right now, when people were selling stocks, if they then went and bought bonds with the money they sold out of stocks because they were concerned about tariffs, the bond market prices would go down and the mortgage rates would go down. Now we've seen some of that, but now we've seen people buy back into stocks. I think at a high level, though, it's important to just kind of say right now, there's a lot of volatility. That's that VIX that AJ was talking about. And there's a lot of uncertainty. So if any client asks you what's going to happen to mortgage rates, I would be very hesitant to give any sort of crystal ball. We've been saying this for a while, honestly, but like right now it's like crazy convoluted.
Just get a Truth Social account and just follow the president and what he says he's going to do and what he did. And that's probably going to inform you pretty well on where things are going to go. I mean, truthfully, that's all that's happening.
It's really just a China trade war at this point, though.
It is, yeah. And the VIXs I just looked at about 36 right now. Mortgage News daily rates yesterday on a 30-year fix were 6.95. And a reminder, that thing has traded on a margin from the 10-year back in 2015 at about 1.5% over the 10-year yield, which is right now at 4.3 this morning. So that would lead to, if we had the same economic environment in 2015, and that's how the spreads were happening, we'd have a 5.8% average contract rate on mortgages. We saw that go as high as 3.0% or even 3.1%. So it really went up. Now that margin has snuck its way back down. It's about 2.6% higher than the 10-year yield. So when you're seeing, like Josh is saying, we're off almost 10 basis points on the 10-year yield this morning. So you should see mortgage rates roughly go down by 10 basis points, but it's not always a straight line because sometimes there's other stuff going on that determines how lenders are doing that, how the buyers of those bonds are ultimately making decisions on the back end.
And the other thing that will play in down the road, which we don't know much right now because they've kind of stood still, but we've talked a lot about the Fed and their overnight rate and the behaviors that they have, how those then trickle through to other rates in the marketplace, specifically the 10-year, which trickles to the 30-year. The Fed's decision-making will largely be impacted by how this tariff process plays out. Right now, probably not a lot of impact, but 3 days ago, I would have told you, everyone's looking at saying the word recession, if things go into recession, but there's also inflation. How does the Fed respond? There's still a ton to be determined. And so I think it's important right now to just say, yeah, things are really kind of crazy. And even like, we should probably even talk about like clients having fear as a result of the markets flying around. Like I had a call yesterday with other Ben actually, where he had a client where he said the client's like afraid of the fact that he might lose all of his money. So maybe he doesn't want to buy a house anymore. But it's every day things are moving and shaking so much that I would just try to exercise calm and patience when you're talking to clients. Let them know that it is uncertain and it's okay to be afraid when things are uncertain. But that it's really hard to make a decision when things are uncertain, and making decisions in fear typically tends to create less optimal outcomes.
Yeah, that seems fair. And I think, again, I talked about it a lot. The macro environment doesn't have to inform the micro situation itself. Like maybe you're in a situation where like, I'm in a really steady job. Like we could have a massive recession. I'm going to be just fine. Mine's the last to go. And rates have started coming down now. Obviously we saw them bounce back up. But like, let's say they do start coming down, because that's typically what happens in a recession, unless we have some stagflation, which we really don't want. And they're going to be in a better situation because they're not worried about losing their job. The rate's a little bit better than they thought it was going to be. Maybe the demand's a little bit less because there are people out there that are saying, economy's bad. I don't know if I want to do this,
Have you heard China's new play?
No.
They've responded.
They did.
China opposes practices that ignore the laws of market economy, plunder by force, and damage the legitimate rights and interests of enterprises. The specific business arrangements must comply with Chinese law, including the export of technology, which must be approved by the Chinese government.
Oh, so they're not going to send us phones anymore?
There's a specific app in discussion right now that is now going to probably become the head of some of this stuff.
Oh, TikTok.
Yep.
Wow. No more dancing.
They're
on
withholding.
TikTok,
They're withholding dancing from our phones.
Shoot.
That's their big play. I mean, it's wild that the world economy could be pivoting right now on a phone application that shows people dancing.
Some of the
isn't that a wild reality?
It's wild, and I think they obviously think that's the thing that we want the most.
Well, it puts pressure on the administration, because the administration said they saved TikTok when they came on board because TikTok was going to get banned, and now maybe they're ruining TikTok.
Well, they also,
for all the creators that are making money.
They also made a video. The Chinese state media made a video that they rolled out was showing. No, it was from the Chinese state.
It's confirmed?
I think so.
Okay.
Oh, yeah, I went on there. I mean, I can double check that. But yes, a video of them, a bunch of American workers in what appears to be some sort of like a sweatshop.
Overweight American workers.
Yes. Sewing stuff together like they are implying that their people currently do, but our people are now going to have to do.
Because we're not going to let them do it anymore.
It's pretty wild.
I didn't see this.
I thought no chance
it's wild.
could it be from them, but it's really fascinating.
I mean, if the end result is I have less plastic toys in my house, that would be a nice outcome.
And that's the question, right? Like I was trying to research a couple different places, and that was one of the questions somebody commented was, will Americans maybe just stop buying cheap T-shirts from Walmart? Potentially. I mean, what's interesting on tariffs, and like we've talked about, in developed marketplaces, the prices, if there's competition, this is just textbook economics, if there's competition in a marketplace and it's a developed marketplace, the prices that are set are at the margin that the marketplace has determined is a fair margin. And so, obviously that's an oversimplification of a lot of things, but when you introduce a tariff on the value of the good coming into the country, you're now putting it at a price where consumers, I mean, if that was the right price all along, they would have charged that price. So it's at a price now where they know it's an optimal output for the consumers to actually purchase the product. When you take a T-shirt at Walmart from $7 to $9, you and I both know they're not going to sell as many T-shirts because $7 was the optimal price that they could produce it at and make the margin that they wanted. Mm-hmm. And so that's what's going to be super interesting is, are you going to see these earnings outlooks really, really sink? The fact that the market has come back, even for companies like that do import a ton of their stuff from China at 125% tariff moving forward, one would think that they're not going to make as much money as they were going to without that tariff in place, right?
I got a quiz question for you. What's the microeconomic concept that you just described called? Starts with an E.
I don't know.
Got it? Anyone?
What is it?
Elasticity.
Elasticity of prices. There you go. Yeah.
How will the market move based on the pricing changes? So, yeah, it's going to be really interesting. I mean, I think it's far less simplistic than people like, for example, the tariff is on the cost. So if a shirt sells for $7 at Target, it's not going to be $15 tomorrow.
It's whatever Target bought it for.
They might be paying $2 for it. So maybe the shirt's now costing Target $4 and they're going to sell it for $9. But it is also this component of like downstream impacts. If Target can't sell as many shirts and they make less money, then they may have to do layoffs because they have less money to pay their employees, which may cause more unemployment, which may cause... there's all of these different components. Well, I'm not saying Target's going to do that, but I'm just, it's complicated.
And now that we're at this like 10% versus 125% world, what we talked about yesterday, Josh, is what if China just ships that shirt to Vietnam and then Vietnam ships to the United States and they just say, oops, we lost the record of where this came from originally. I'm sure there's stuff like that that's going to be happening or is already happening. But also, like we also talked about, like the tariffs were pretty freaking imbalanced for a long time. Like We've been supporting the entire world in a very interesting way for 100 years, probably almost. And his goal was to make it so that the tariffs maybe just line up, or maybe there aren't. You talked about Musk talking about maybe there are just no tariffs in Europe and the United States, and
tariff-free zone.
Exactly. So it'll be. Dwight just did the spooky turn off the lights and turn them back on. That was fun.
But anyways, we got way outside of real estate today. I mean, part of this is because it is important to be following it because it will impact your lives. It'll impact the economy. It'll impact your clients, and it'll impact rates. So we're going to keep on top of this. We're going to continue to be monitoring it. We'll continue to talk about other concepts that we've even, behind closed doors been talking about, like things like what's going to happen to inflation with all this stuff and how will that roll through. So more to come here. But if you wanted at least an intro to what's happened in the last week, you've probably been paying attention, but hopefully that was a way to give you a little bit more information about what's been going on.
And big ups to Ben D for coming on today.
Yeah, thanks for joining, Ben. Yeah. It was awesome. We'll do this again soon.
Yeah, absolutely.
All right. Well, that's all we got for you today on the Nerdy Agent Podcast. And remember, be better.